Have you ever wondered how businesses track every rupee, dollar, or euro without missing a single transaction? What if I told you that every financial report in the world follows a simple principle that ensures perfect accuracy? Welcome to Learn with Aiman, your go-to channel for professional accounting and finance education. Today we are going to break down the double entry system, a method that keeps every business financially organized and error-free. What is double entry system? The double entry system is an accounting method where every transaction affects at least two accounts. One account is debited and another is credited, ensuring the accounting equation stays balanced. For example, you purchase office equipment worth $2,000 with cash. Cash, which is assets, is decreasing, so credit cash. Here cash is an asset and it's decreasing. So we credit our cash with $2,000 and equipment is also an asset but it's increasing. So we debit our equipment with $2,000. Accounting equation: assets is equals to liabilities plus owner's equity. Why should you care about double entry system? If you are a student, accountant, entrepreneur or freelancer, this is a must-know concept. This system is used by banks, corporations, small businesses and even government financial records. Learning this can help you pass accounting exams, manage business finances or prepare for job interviews. Golden rules for accounting. Types of accountants in double entry. In accounting, all transactions fall under three categories: personal accounts, real accounts, and nominal accounts. Number 1. Personal accounts, people and organizations. Rule: debit the receiver, credit the giver. For example, you lend $500 to a friend. Debit friend's account, who is a receiver, and credit cash account, who is a giver. Real accounts, assets and properties. Rule: debit what comes in, credit what goes out. Example: buying a new laptop for work worth $1,500. Debit laptop account, which is asset coming in, and credit cash account, because cash going out. Nominal account, income and expenses. Rule: debit all expenses and losses, credit all incomes and gains. Example: receiving $5,000 salary from your job. Debit cash account, it increases in asset, and credit salary account because it increase in income. Historical fact: Luca Pacioli, father of accounting. The double entry system was introduced in 1494 by Luca Pacioli, an Italian mathematician. His book Summa da Arithmetica describes debits, credits, and the importance of keeping balanced financial records. Practical journal entry. Example: journal entry format: date, account title or details, debit and credit. Here in this journal, we are taking an example of receiving sales revenue. So we are receiving sales revenue and we credit it, and because of the sales revenue receiving, our cash is increasing, so we debit our cash. Real life examples from businesses. Retail store example: you buy inventory worth $3,000 on credit. Debit inventory account, which is asset, and credit accounts payable, which is our liability. Freelancer example: you receive a client payment of $2,000. Debit cash account, which is our asset, and credit service revenue, which is our income. Salaries paid example: you pay employees $1,500 in salaries. So debit salary expense because it's an expense, and credit cash because it's an asset. So we are minusing it. Common mistakes in double entry: forgetting to record transactions leads to unbalanced financial statement. Incorrectly debiting and crediting accounts. Example: recording revenue as an expense. Unbalanced entries: if debit is not equal to credit, your entire accounting system collapses. Quick fix: Always use a trial balance to check for errors before finalizing financial reports. Difference between single entry and double entry. Here in this table, we are taking three columns. Number 1 is of feature, number 2 is of double entry, and number 3 is of single entry. So we can differentiate between double entry system and single entry system easily. Let's take number 1. While in double entry system, the accuracy is high, but in single entry system, the accuracy is very low. If we talk about financial clarity, double entry system is detailed, while single entry system is limited. If we talk about fraud prevention, the fraud prevention in double entry system is strong, while in single entry system it's very weak. Let's talk about business stability. A double entry system is very stable or is used for medium and large size businesses, while single entry system is stabilized for small scale or very small businesses. Small shop owners use single entry, while banks and corporations use double entry system. How businesses use the double entry system? Accounting software used by businesses like QuickBooks, SAP, Oracle, Xero, Tally all follow double entry principles. How financial statements are created? In businesses, we create financial statements by creating 3 statements. Number 1 is profit and loss statement, number 2 is balance sheet, and number 3 is cash flow statement. Advanced insights on double entry system. Why is the double entry system the backbone of accounting? Built-in error detection. Every transaction is recorded twice, ensuring self-verification and reducing errors. The trial balance helps identify errors before preparing financial statements. Fraud prevention. Since every transaction affects 2 accounts, manipulation is harder compared to the single entry system. Large companies use internal audits and external audits to cross-verify entries. Legal and regulatory compliances. IFRS, International Financial Reporting Standards, and GAAP, generally accepted accounting principles, we also call it GAAP, require businesses to use double entry accounting. Governments mandate this system for taxation, audits, and corporate financial transparency. How AI and technology have improved the double entry system. Automation in accounting software. Platforms like QuickBooks, SAP, Xero, and Oracle automatically record debits and credits, reducing manual errors. AI-powered software can detect unusual transactions and flag potential fraud. Blockchain and double entry system. Triple entry accounting is an emerging concept where transactions are encrypted and recorded on a blockchain ledger, adding an extra layer of security. Cloud-based accounting allows businesses to access their double entry records from anywhere. Improves collaboration between accounts managers and auditors. Real life example of double entry system in action. Banking industry. Every time you deposit money into your bank account, the bank records debit, cash account, which is because our asset is increasing, and credit, customer's account, because the liability is increasing. E-commerce business like Amazon, Daraz, Shopify. When a customer buys a product for $100, let's say, the company records debit accounts receivable or cash if paid immediately, credit sales revenue. Hospital and healthcare industry. When a hospital purchases medical supplies on credit, the entry is debit medical supplies because asset is increasing, and credit accounts payable because liability is increasing. Hotel and restaurant business. A customer pays $50 for a meal. The restaurant records debit cash account and credit food sales revenue. Lesser known facts about the double entry system used in ancient civilization. Before Luca Pacioli, the concept of double entry existed in Babylonian, Egyptian, and Roman accounting systems. Merchants in Venice and Florence used a similar system for tracking trades and loans. Why some small businesses avoid double entry? Small businesses sometimes use single entry to save time. However, banks and tax authorities prefer double entry for transparency. Forensic accounting uses double entry to detect fraud. Auditors compare bank records, invoices, and ledgers to check for missing entries or fake transactions. Pro tips for beginners learning double entry system. Memorize the golden rules. Understanding personal, real, and nominal accounts makes journal entries easier. Use accounting software, try Tally, QuickBooks or Xero for practical learning. Practice real transactions, record rent payments, salaries and purchases in a notebook to develop accounting habits. Reconcile accounts monthly. Always cross-check records with bank statement to avoid errors. I have a question here for my viewers. If a company buys equipment for $5,000 in cash, which account is debited and which is credited? Comment below. Also write in the comment section and tell me that do you prefer manual accounting or accounting software? I'm waiting for your answer. Conclusion. The double entry system ensures accuracy, fraud prevention, and financial clarity. It's used by every major business and financial institution worldwide. Mastering this will help you become a professional accountant or manage your business finance efficiently. Do you think the double entry system is easy to understand? Let me know in the comments. If you found this video helpful, make sure to like, share and subscribe to Learn with Aiman for more professional accounting tutorials. Till then, happy learning!